Hi guys, I'm Brenton Saishi, Head of Capital at Lion Property Group. And whether you're investing in crypto, the share market, property, there's always going to be an element of risk. If people are promoting investment opportunities that are risk-free, then it generally is too good to be true. In terms of property development, I do want to touch on a few questions that we are getting at the moment just around risk associated with property development. It is a hot topic, the first question, which is based on interest rates and inflation and how those do impact a development or the property prices. So the question is, are we concerned about interest rates? As a developer, of course, interest rates is one factor in a development that we do need to look at because the end value of the development might not fetch the prices we anticipated when we once looked at the project. However, in the specific case for Luminaire, it is your more high-end development and the prices we are looking to fetch are $3+ million. People shopping in that range aren't generally relying on a bank to provide them the funds for such a purchase. Whereas, properties around the $700,000 to $1 million mark, where banks provide up to 90% leverage on those properties, you're going to be exposed to interest rates and impacted by interest rates more than your higher end properties or people with money to afford those properties outright. So in terms of this Luminaire development, we're not too stressed about the interest rate hikes. We do factor an element of fat in the project to deal with that anyway. The next question that we do get a lot is around the planning cycle or planning phase with a project. But there definitely is an element of risk there that we won't get the plans and permits approved by council. So what do we do as a company to mitigate that? With any project or any shire, there is there's guidelines or conditions within that area that if you do stick to, you can obviously get plans approved quicker. However, you can't control objections from the everyday people like ourselves. If you provide answers and you build within the scope of that shire, then generally you should get a pretty clear run at providing or obtaining plans and permits for the project. So sticking to council, listening to council as well, pre-council meetings, and sticking within the guidelines, pushing them a little bit, and sticking to the guidelines helps us achieve plans and permits at a quicker rate and potentially avoiding VCAT, which does occur time delays in the project. An important thing about the planning process within our projects is we do allow 36 months for our developments. Generally speaking, up to 18 months for planning and permits, and then 18 months for build, construction, and sale of the project. It's a pretty conservative timeline, and we hope to achieve plans and permits within your 6 to 12 months, and then the building within 12 to 24 months. So we do allow enough time there. The next question we do get in the market at the moment, there is a lot of volume builders going bankrupt. Being the developer, it's imperative that when we get plans and permits approved for a project and need to onboard a builder, there's a process and it's a tender process. So builders will put forward their price. We'll then do a health check on that builder. Not only will we look at the price they give us for the project and the build price for our project, we'll look at the directors, who the directors are. We'll look at what current projects they have at the moment or they're undertaking at the moment, and we'll associate an element of risk with the projects and their exposure that they're doing at the moment. If this is a well-known builder that we've worked with before, obviously it's a lot easier for us because there's a pre-existing relationship. However, new builders, we do need to look at, is the builder liquid? Have they taken on too many projects? Do they have the insurance available to, help them in a time that they might go bankrupt? So it does also help us that, building insurance is important, that the builder has it, that they have enough building insurance there, that if they do go bankrupt, us as a developer can, obviously take advantage of that. And then we just have to simply find another builder. Generally it takes 3 to 6 months, delaying the project. But that's something that Lion Property Group has to manage very carefully and closely. Another question, what happens if we build a project development and the property doesn't sell? Now, this has happened to us in the past where we've built 16 apartments, we sold 10, and we're just going into COVID. The last 6 properties struggled to sell. We pulled them off the market, we refinanced them with the bank, released the equity, and were able to work out the payout to the investors that way. which is our secondary exit strategy. Obviously, our primary exit strategy is build, sell the properties for the highest and best price. If they don't sell, secondary option could be refinancing the project and releasing the equity. Obviously getting the good valuation from the bank. Now, what happens if the project is delayed? In any property development, there is going to be delays. I'm not going to sit here and say property development is a straight line opportunity, no risk, straightforward, here's the start, here's the finish, because that's a load of crap. In terms of this development or any development, there is going to be challenges throughout the development that are unforeseen. No matter how much experience the developer has, there are definitely unforeseen circumstances that arise that have to be managed by the company or the project manager to push that project forward. And that's why we love our job. That's why we love our company. That's why we love what we do, because there is an element of surprise and it does keep us on our toes. In terms of the delays that can be occurred, in terms of our developments, we offer a delay compensation, or in our investments, we offer a delay compensation to the investor so their per annum return isn't diluted. It's very important. So an investment over 3 years, if they're going to give 12% per annum, it's 36%. However, if that investment goes for 5 years, the per annum return is obviously going to be diminished. Providing a delay compensation at the same rate of the 12% per annum provides the investor a little more comfort, motivates us as a developer to get the jobs or developments completed on time and target so we don't eat into our profits. Now, the next big question is, can I get my money out of the project development before it's completed? With property, as everyone knows, when you buy a property or invest in property, it generally is an illiquid investment. Your funds or the property has to then be sold to realize that money back. Same as with property development. You purchase the property or you invest in the property development needs to be built. It's not until the property is built where you can realize the funds, whether that is through the primary exit strategy of selling the property or secondary exit strategy of releasing the equity in the property to pay out the investors or get your funds out that way. For a more detailed breakdown on these risks, check out our information memorandum where there is a whole risk section in there with what risk that we can foresee and how they are mitigated. Feel free to schedule a call if you'd like to talk about the current market conditions and risk associated with property development and investing.